macro dynamics often matter a lot more to vol than the internal asset class dynamics within those asset classes.
Awesome. Yeah. So I just want to shift over to Guy over there and just, it's so interesting when I saw Athena launched and just the philosophy of just creating this structured product that captured the funding rate and then adding on the ETH staking reel just was something that just, when you look at it, you're like, oh my God, why hasn't this been done before? It was simple, but it was so incredibly effective. And I'm just curious, when you think about your journey since, as you've gone through new product launches for Athena, what were some of the reasons that you originally focused on that, which is just, a basis trade is something that is very well known in TradFi, and, those types of people I found instantly understood what you were doing, but it felt like it was something that in the crypto world, it took a bit longer to truly grasp it, but it was very quick and intuitive for TradFi. So using that context of bringing on these, existing strategies, et cetera, what are you most interested in terms of other structured product or derivative strategies to bring forth on-chain?
Yeah, I think part of the explanation maybe for like the visceral reaction you saw when we first came out was there was quite a bit of scar tissue, I think, from like the last cycle, whether it was Luna or FTX. We came out and we said we're doing this weird dollar structured product and it's on centralized exchanges. It's like the two worst things from last cycle we kind of put together into one idea. So I think that reaction was understandable. And I actually think it was pretty good to see when we first came out, because I think last cycle, no one really questioned anything. And that kind of like led to a lot of what we saw by the end of the cycle. I think the view that we had was, well, the idea from Athena actually came just after Luna had collapsed. And I think that there was extremely obvious demand for a dollar that can produce whatever, double digit yield, sometimes 20 on Luna. But obviously that was constructed in completely the wrong way. But I'd basically been doing the basis in my PA on the side and had netted like well over 20% in the year that Luna had gone down. And it just felt very obvious to me that he sort of had this enormous source of cash flow within the space, which hadn't been tapped in any material way. So if you take a step back and think about what are the three sources that you can actually produce $10 billion of cash flow within crypto a year, it's Tether equity, it's Binance equity, and then it's the basis within the derivative market. And there's nothing else that produces $10 billion of cash. And for a space that's so obsessed with yield and generating returns on things, we don't produce much cash flow in like crypto, like generally. And so I just felt like a very weird mismatch to me, where you had this enormous source of cash flow that no one had sort of like looked at and thought, how can we sort of build something around it? I think that was the opportunity. And I think, when we launched, very fortunate in terms of the timing. I think we came out and like funding rates are at 60%. So it wasn't particularly difficult to sort of grow when that was the context. On the question of sort of like what comes next, what else can you put in here? Unfortunately, I think within crypto, there actually isn't there isn't something else that looks like that. If you think about dollar assets, you can actually just simplify them as actually lending to someone. So when you're buying a stablecoin like Circle, you're lending to the US government. When you're buying Sky's DAI, you're essentially lending over collateralized to ETH on chain. And then Athena is essentially just lending money to CeFi in the derivative market. And those are the only real three places that you can actually get that kind of scale and return at multi-billion-dollar scale. I do think what we start to see next, and I think the next wave of this like RWA theme is actually for issuers like Athena and Sky, sort of thinking about that entire credit universe that sits between T-bills and highly illiquid private credit. So there's literally hundreds of trillions of dollars of something that looks between 4% and immediately liquid and 10% and highly illiquid. And I think you saw something come out today with Sky and Centrifuge, I think, today. I think that's direction where things are going to go. And you'll see a few sort of hybrid stablecoin or dollar issuers start to put more of those credit assets into their backing as rates fall. Yeah.
Awesome. Austin, shifting over to you and the world of stablecoins, which feels like the topic du jour these days. Suddenly everybody in TradFi is talking about stablecoins. In fact, even you can tell how far they are away from it because they keep referring to it singularly. They're like stablecoin or this stablecoin. But I'm curious, as somebody who's built and developed and consulted for many years in that space now, what's your current thinking in terms of the trend of the stablecoin explosion, how it relates to, when I think about bringing assets on chain, one of the key ones is effectively, these stablecoin issuers buy a ton of T-bills and out the other side come stablecoins. And so with that framework, how are you thinking about it these days?
Well, for one, with the Genius Act, I actually think the buy pressure specifically for just T-bills will probably be lower. All right, so back to me knowing an unhealthy amount about financial markets. If you look at the Genius, like reserve assets, bank deposits, T-bills, and some things that are overly jargonized called repo and reverse repo, which is overnight collateralized loans. And what's actually probably going to happen is the majority of stablecoin issuers in the US framework, which will probably be most of them just because this is where the assets are going to prefer reverse repo. And what that means is rather than having to buy a T-bill, settle at T+1, and if somebody wants money from me, sell a T-bill and settle at T+1, I can just lend cash overnight against treasuries across the stack. And if I need the money back, I just cancel that trade daily and get the money back. It's more liquid and there's more variety of collateral. This is going to bring funding rates down for all of the treasuries, which means all of the other people who are engaged in activities where they have that stuff as collateral reap an advantage from this. So I think the entire treasury curve is going to benefit, not just T-bills. And the fascinating part of that is that this is all demand coming primarily from non-US persons. Like, I will remind everybody here that stablecoins are all but unused in the United States. So if you're sitting here and you're in the US and you're like, why are these things a big deal for anything other than crypto trading? The answer is they're not. Please leave. Like, you're not the target audience. But on the other hand, if you live in like Argentina or Venezuela and you want to get your hands on a currency and not in your local banking system, this is far and away the best option you've ever had. So as we think about putting things on a blockchain and the impact of global markets, I would suggest the real shorthand that everybody should have in their mind is what US dollar stable coins and like the regulated frameworks are doing is saying you could take what looks like a government money market fund from a stability standpoint, put a payments wrapper on it, and then anywhere in the world, so long as you've got two things, which is the internet and something of value to swap for it, you're now part of the dollar system.
Building off of that, Guy, as somebody who's working on different iterations of the traditional, one-to-one stable coin, I'm curious, what's your high-level thoughts of the overall stablecoin industry as it's developing right now, and also how that contrasts with what's being developed in terms of the Genius Act through Congress right now?
I think it's super positive. I think, we even got called out in the beginning whether we could call our product a stablecoin and that kind of stuff. And I think actually being extremely prescriptive around what are the qualities that we need to actually call these things stablecoins, I think is actually just a healthy outcome for users in the end. So, everything that's falling under the Genius Act as a payment stablecoin, I think that's great. We should put it into one bucket. But I also don't think that means we should exclude, I guess, the experimentation that goes on for like dollar adjacent assets. I think a good analogy here is, cash versus, T-bills, bonds, and the entire credit universe that exists within TradFi. It's not necessarily a bad or evil thing that these things exist that aren't T-bills. They're useful to some people in some use cases. So, I think directionally where it's going now, looks like there'll be a sandbox and sort of carve out for these other experiments to exist and sort of continue experimenting. And I think that's, healthy in terms of being super transparent with users around what fits a tight definition. And then everything else, I think, should reconsider how they're sort of presenting themselves to the market. Yeah.
Yeah, awesome. Okay, so just for the last few minutes here, just want to go through with each of you and just hear about what sort of general innovation, it could be related to the specific sector that you operate and build in, or something that you're interested in just on a personal basis. But would love to just hear, what trend are you most excited about in crypto right now, especially in relation to how that intersects with the TradFi world. And in the same vein, it feels like right now, as we go through the crypto cycle, we get to an interesting moment right now where it feels like more of the froth is actually in the TradFi side of things, either these treasury companies or just, everybody and their mothers starting their own SPAC these days, Circle going nuts. So would love to just hear how you also contrast that excitement with, being a bit more level-headed around some of the associated risk that comes when you just, the natural evolution of crypto cycles, it feels like to take things to their logical extremes. So would love to just hear, what is something that we should be cognizant about in terms of just, either tail or risk in general, and maybe starting with you, Kaledora.
Sure. I'll stay a little bit just high level, more philosophical. I think the thing that I'm most heartened by over the last, say, 18 months is just a I think, reversion to some level of sanity in the space and focus on the things. When you mentioned, a lot of the froth is actually in TradFi, I would echo that sentiment. People care about cash flows. People care about revenue. It's great. And they care about useful products with real users. And at least as someone building an app with cash flows, that's a very welcome change vis-a-vis, I think, what perhaps has historically been valued in crypto. So simple answer.
Yep, agree with that. I actually think the space that Ossim's building in is, I had a few people ask me, what would you build if you're not building Athena? And I actually think that this idea of putting perpetual swaps on equities is like a $20 to $50 billion idea for the person that does it right. It feels we're on the cusp now of perhaps becoming legalized within the US. And if we think about how retail accesses leverage right now within Robinhood, it's, using short-dated options essentially to access leverage. The issue with that is that when you're pricing an option, you're not just trying to get leverage, you're actually having to price volatility and understand Greeks, which obviously retail users on the other side don't understand. And that's sort of to the benefit of Citadel sitting on the other side. And so I think it just feels very logical that retail leverage speculation on equities will move at some point to perps rather than options. And people can sort of like capture that flow with what I think is one of the very few financial innovations of crypto that is actually just outright better than anything that you find in TradFi, i.e. the perp. That to me just feels like an enormous opportunity to go grab. Yeah.
I could just to say one more thing. I couldn't agree more. I always say that given the option between perps and options, retail picks perps. The only reason that people trade options so much in TradFi is simply because they don't have perps or they don't have the most similar instrument to a perp, which is a CFD. And incidentally, they don't exist in the US, but incidentally outside the US, the most frequently used instrument for leverage trading is a CFD, which is very similar to a perp. It just doesn't have a funding rate and there's some other dynamics. Doesn't have like its own internal price discovery, but you're basically can easily go long or short. You never have to roll the instrument. It's very similar. So yeah, I couldn't agree more. People actually just want to go directionally long or short. They don't want to think about other complexities and vol that's involved in actually pricing the instrument they're trading.
Austin.
So I think what I'm most optimistic about is we're finally at a point, thanks to the Biden administration being out of the picture, where we can start having a mature discussion about governance with some of the TradFi institutions and crypto people actually talking to each other. So one thing I would say I think was really important that happened recently that probably has been under-discussed was the Cetus hack on the SWI blockchain and how they intermediated that whole thing, right? Because you have one group of people freaking out that, oh my God, the validators exercised centralized control and interdicted this and literally froze the assets and took a lot of them back. You have another whole set of people who are being like, now I could actually have a discussion about a public blockchain. Because if anybody here ever thought that large banks were going to use a Bitcoin type framework to, again, put grandma's house on there, you were crazy and didn't understand the problem, right? And there are solutions that are neither Bitcoin nor banks building private chains that are walled gardens that are exactly what they currently do, only with blockchain theater in the background, that exist in a middle ground that are now starting to be discovered. If anybody here hasn't looked at what SWI did or how governance on Stellar works or how an Avalanche subnet works, now is the time to start paying attention to those things, because as big players enter the space, over time, as they sort trade-offs with real assets, those are the kinds of places they're going to go. They're not going to go to Bitcoin. They're not going to go to Ethereum, but all the private bank blockchains are a bridge to nowhere, right? So we're going to finally have a real discussion about a middle ground that might work to build things.
Awesome. Well said. Well, that's just about all the time we have. Thanks again to all three of you for joining us. And yeah, give it up for our first panel of the afternoon.